Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 10th, 2019. I am Frank Ochoa, aka PivotBoss. Here is a look at the daily time frame of the ES. You'll notice right here that after hours yesterday we started to sell off a bit. However, price is now forming a little bit of a failed new low in the uptrend here, where prices pushed below the previous session's low there, traded below it, and is now pushing back above it by a little bit here. Any rejection of that low here would suggest more upside, but if price cannot stay above that previous low, that's where things open up a little bit more downside. Overall, we've really fulfilled a lot of the upside targets on the near term that we were looking to reach. I mentioned this midpoint was going to be very important. That was the midpoint of last month's impulse sell-off. And I also mentioned the 2586 half FOMC key level and as high as 2600. We've come very close to reaching 2600, not quite there. The highest we got yesterday was into the 9675. So very, very close, but not quite there. 3¼ points off. You can see back here 2600, very, very important here. Prior support when offered and has been offered since. If price is able to reestablish acceptance above 2600, that's where things could get very interesting. So right now I would say in the very, very short term, any pullback is likely to be short-lived, and bulls will be looking to defend to try to push this thing higher. Any failure to hold the previous month's close, for example, which is just above the 2500 level, would suggest a bigger pullback. So right now, despite the quiet uptrend here, bulls are still defending at the moment. And even if we do see a pretty sizable pullback, say to 2500 or 2510, that could still be okay, and bulls may come in and look to defend those prices for another higher low development. So keep that in mind. If we take a look at the NQ, you'll notice here again price pushing above the prior pivot lows here. That's the 6500 level, and trading mostly around 6600 yesterday. So 6500 is about right there. Price getting above it. You can see the 8-period average coming in to provide support. And very similar to the ES, this one dipped below the previous session's low and is popping back above right now. And so again, that could be suggestive of more upside. If there's any failure to hold, though, that 6538, 6540 zone, that could open up a wider pullback. But like the ES, I think a pullback into about 6400, maybe a little bit lower into the blue dot here, which is the previous month's close. Any pullback into as deep as that zone could still be a great buying opportunity for another shot higher as this thing continues to form higher lows after that Christmas Day rejection low. So again, while more downside could be seen if these lows get taken out, it may not be a wide pullback. It could be defended by bulls here at these key levels that could keep this thing headed higher. Let's take a look here at crude oil. You'll notice with crude, this thing has been nonstop to the upside. A huge, huge day. Really what changed the entire day was here 2 days ago. We had been forming tails on the top ends of the ranges here. This one was showing additional weakness, but by the end of the day rallied, closing through the tail, and then the previous session here rallying huge, up 5% for the day, getting as high as the 52.58s. After a huge move like this, you're likely going to see trading range activity, sideways type of behavior, and so fade the edges with an upward bias. So any tests, say below 51.50, would likely be an opportunity to defend this thing back up. We could theoretically see a push back into the midpoint of the previous session very easily, and again, anything below there will likely be defended by bulls as price continues to push toward 55s. So this one here has gotten a very solid break back above prior support to reclaim that zone there, call it 49s, and the next price distribution above takes it to 55, so the top end of that range. Goes from 49 to 55. Breaking back above suggests more upside to that area. Any pullback as deep as 49s could still be bought for a continuation to 55. So all signs point to more upside toward that zone, as crude oil is enjoying the biggest rally that it's seen since before the October sell-off. If we take a look now at gold futures, you'll see here gold continues to show strength here. I've mentioned before that this has been a very intense bullish trend here. All pullbacks have been defended here at and below the 8-period moving average in that trigger zone. I mentioned that those are buyable for short-term pushes higher. But one thing to keep in mind, I want to just talk longer-term picture here. If we bring this out just a little bit here, this is over the last year. You recall we had this key level here, which is 1240. There's an LVN there, and a major low. Up here is the 1360 level, and this is a 4, 5, 6 month rounded bottom here that has broken higher and continued higher. Typically speaking, the target will not will usually rather go all the way back to the top end of the recent pivot, high or low. In this case, it's a rounded bottom. You usually continue higher till you hit that target. So if you go sideways 4 to 6 months, this could be 4 to 6 months of strength up toward 1360. So say by May, we could easily have been trading 1360. Now, one thing to also keep in mind is prices just reached the 1287.60 level. That is value. That's a level not seen since it took it offered here, dropped and held, and then rallied back to value. So after a move like this, it will not be uncommon to see price chop around value throughout the month and stay bullish, but mostly sideways. It's something it did back here, for example, dropping from 1360, chop, and then extending the move. This move dropped, chop, and then extended the move. So we have a wide pivot range for the month of January. Again, it would not surprise me to see a swing down to take out these lows and take out the highs, and all of a sudden we're sideways with a shot to continue higher toward 1360 as long as price continues to hold 1240. But really, price shouldn't be getting back below 1250 much anymore. So this has much more upside price action ahead. Lastly, taking a look at the YM. You can see here the YM has bounced back above the previous year's key range low. Took out that low early this year, pulled back and rallied so far. That's fairly bullish. The one level now to contend with, we're actually right between two major levels, is this 24K level right there, and then right below it 23.3 or so. Those two levels very important right now. The flow is to the upside. The recent pullback held market structure and continued higher, has extended market structure up. Nothing has really changed the direction from being up right now. You also see right here a failed low developing again today, similar to the other two indexes, the ES and the NQ. So this suggests more upside, and even if we did pull back for 1 or 2 days, any pullback, say into 13,320, could be a buying opportunity to continue this thing higher towards, say, 2450, 24,500 rather. So it could be a pretty significant move in the near term. And if we are going to reclaim, last thing here, if we're going to reclaim the 24K level, the next level up is about 26K. That's the price distribution from before. So this is a very, very important level. If it fails here, perhaps we see some sort of pullback that could be any manner of intensity, right? It could pull back just to here, it could pull back to here, or it could extend even more. But this level right here, to be able to get above it and hold it, or generally chop around and reclaim that level, that opens up the upside into 26K. So continue to watch 24K as a major level here for the YM. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.